So there's been some pretty substantial selling pressure in the stock market the past few weeks. There's many calling it a crash. The question is, when will it end? Well, I'm going to give you some insight on that and tell you what to look for to call the bottom. Plus, I'll do my regular market analysis. We'll look at the stock market, the commodity markets, currency market, Bitcoin, which has had a pretty bad week as well. And then at the end of the video, I'll look at the day trade of the week on TOP. So pretty significant weakness lately, but it's actually pretty normal at this time of year. The worst month of the year historically, if you look at year after year after year, is September. Now it can sometimes start a little early. The weakness can start a little later, go into October, but it's pretty normal. Coming out of the summer quarter, you get market weakness. And this year is no different. We're seeing a pretty strong selling the last couple of weeks. But the question is, when will it end? Well, typically the market bottoms in September or October and then starts to move up until May or June. And so we're kind of on that cycle again. But that's not enough. We need to know what to look for, and we'll talk about that in just a moment. We also have this year the rising interest rates that are working against us. If we look at that chart of the bond market, which we're going to look at in a moment, you will see that interest rates have been rising in the bond market the last few weeks, and that has an effect on the stock market as well. So the key thing, however, is to watch the charts to look for a break of a downward trend line from a rising bottom. Now, because this downward trend line is relatively short-lived, it's just a few weeks old, and it's still in the longer-term upward trend line for stocks, we may not have a long downward trend out of this. It's simply a short-term pullback from an overbought market. That's what it feels like to me so far. So we want to watch the 30 or 60-minute chart for a break of the downward trend line from a rising bottom. Here's how that looks, or here's how that chart looks. This is the S&P 500, and you can see that it was in a nice upward trend there, and then it started to build falling tops. Broke the upward trend line from a falling top here, and now we're in the downward trend. And what you can see right now is we fell way below the trend line. So that tells us that the market is oversold. Anytime you run away from the trend line, you're oversold. And so now I expect that the market's going to move back up toward the trend line. However, that's not enough to call a bottom. What we need to see is this downward trend. Okay, we're down here right now. We've gone parabolic to the downside. We're going to come back up to the trend line, and if we can then build a rising bottom and break the downward trend line, then we should get a reversal of this weakness. There's a few things that have to happen. We've seen step one. We've seen the bounce from being oversold. And so there's some hope that the weakness is over, but we still have lots of things that need to come together. All right, let's get into this week's market analysis then, starting off with the chart of the S&P 500. SPY is the symbol. And there you can see on the daily chart the pullback. Let's take a look at that 1 month chart again. Here's the downward trend line. We're way below it. We made the bounce. Now we need to come back up to the downward trend line. On the 3-year weekly chart, you can see the upward trend is just being broken, but not from a falling top. So it could obviously lead to lower prices, but I think we're going to see a little bounce in the short term. The question is, do we bounce, make a falling top, and then get more weakness? I think you want to be fairly cautious. It's a slightly bullish market in the long term, but there's some issues that we need to pay attention to. Let's take a look at the NASDAQ. It's not quite so bad. Looking at that 3-year weekly chart, and there you can see it's really overbought because we were way above the trend line, come back to the trend line. The question now is, are we going to bounce off of it on the weekly chart? I think that's quite likely this week. Will it hold? That's another question, but the last 3 weeks of selling pressure getting a little overdone, and they're probably due for a bounce. You can see that more on the short-term chart. There's your first downward trend line, then you've got this one, and you're quite far below. And so we should see it come back up, hit this, pull back, and then hopefully break, and make the move up to the next one. On to the small caps in the US, which have really underperformed the tech stocks and the larger cap markets in the US. Let's take a look at the 1 month time frame, downward trend line, again far below, need to come back up to it. 3-year time frame, unlike the Nasdaq and the S&P, this market is in a basing pattern. It's not been in an upward trend, and so it could pull back here, but ultimately this has got a lot of catch up to do. And so I think that the small cap stocks actually have more upside potential than the large cap stocks because they've built that base. They haven't participated in the rally thus far, and they should start to play catch up, but we need to see a breakout through resistance. All right, moving along to the Canadian market, T.XIU. Here is the 1 month chart. You can see downward trend, a little different than the other markets in that it's been sort of a choppy downward move, more volatile. But in the context of that longer term time frame, you can see that we are building a nice base, should break out soon because the bottoms are rising, and that should take us back to the highs. On to commodities, GLD, gold had a pretty miserable week. Looking at the 1 month, you can see a steady linear downward trend. It's actually not oversold because the trend is fairly linear. On the 3-year chart, it has broken down from a falling top. So here's your upward trend line, and we broke that, step 1, and now we've broken down from a falling top. So I think gold is more likely to go lower than higher, and we'll see one of the reasons in a moment. On the oil market, 1 month time frame, we have broken the upward trend line, but there's no falling top yet. So we're maybe destined to go sideways, or if we break down through this floor from a falling top, then the oil market's going to pull back. On the 3-year time frame, 3-year weekly chart, you can see that we've really just come into resistance from these old highs where you expect the market to get stuck. We moved up to it, got stuck. We're probably going to get stuck for a little while. Interest rates. Actually, let's look at US dollar first. UUP. This is the reason gold has been suffering. The US dollar has been rising. You can see the rising bottoms there on that chart. Looking at the 3-year weekly, breaking out of this resistance. This is a rectangle consolidation. We've broken out. It may pull back first, but I think the US dollar ultimately headed higher. So why is that happening? Because interest rates are rising in the US. This is a chart that represents rising interest rates. You can see the bottoms have been rising, and then in the last few weeks we've broken out and are moving higher. That means the bond market is predicting higher interest rates from the US Fed. Many were hoping that they were going to scale back those raises, but now the bond market's saying, actually, we think they're going to do some more raises, and that's weighing on stocks. This is a major factor for why the stock market has been weak. GBTC, the Bitcoin chart, let's just take a quick look at that. It had a sharp sell-off right there on the 1 month time frame. You can see a pretty sharp sell-off this week, but even though that looks pretty drastic, in the context of the weekly chart, it's still in that upward sloping channel. It's pulled back to the trend line, maybe one more weakness, a week of weakness, and then it can bounce and continue to move higher. So I don't think Bitcoin looks as bad as it felt last week. All right, so let's take a look at my ratings then. We've got kind of the same ratings for US large cap stocks, Nasdaq small cap stocks, Canadian stocks. It's all short-term bearish, long-term neutral, but it is short-term oversold as well. And so I do think we're going to see a little bit of a bounce back. We saw that start on Friday, so we should see this week a bounce back in the market. On the gold chart, bearish in both time frames, oil neutral on both time frames. US dollar has a bullish trend. Bitcoin, short-term bearish, but still long-term bullish. And then on interest rates, bullish on both time frames. All right, let's take a look at the day trade of the week. This is an example of a trade that we pick up on in our active live service on Stockscores. You can learn more about that at stockscores.com. And what we see this week is this stock started to behave abnormally fairly early in the day, but it really got going here with a break of this pullback that led to this nice sharp rise. Very quick, but in a market on a Friday when it was fairly slow otherwise, That was a quick trade from roughly 625 to 750. So a pretty good move. And then look at how this upward trend changed. So this is a really important lesson here. You've got the market that's gone parabolic to the upside, and then you break the first trend, and then you start building falling tops, and you break the upward trend line from a falling top. And that's when the party was over and the stock was destined to go lower. All right, well, I hope you've enjoyed this week's Market Minutes. If so, click the like button. Let me know your thoughts. Is the market going to go a lot lower, or is the market bottoming? It's a little early seasonality-wise, but perhaps that is the case. Let me know your thoughts. Most importantly, trade well.